Hello, testing, can you hear me? Have you seen the film Naked Gun, where Leslie Nielsen puts one of these things on and then goes to the toilet and everyone can hear it? Have you seen that? I think he did it as well. I think Gordon Brown did it as well. Okay, thank you, Jazz, for my introduction. I'm just here really basically to give you a bit of an overview of True Potential, the portfolios, and indeed our technology. So I'm going to do a little technology demo at the end. First of all, we have a mission statement. I might wander around. I don't stand still like everyone else does. I might wander to that flipboard and all sorts of stuff. But basically, our mission statement is quite simple. We just really wanted to maximise returns, minimise risk for our investors. And we do this by using an advanced diversification to blend together tried and tested multi-asset strategies. Okay, so we focus on minimising costs, managing risks, looking at expected returns, and then risk adjusting those returns. So that's just a mission statement, but let's have a little look under the hood and see what that actually means. Okay, so I think if we look at the past and we go back and look at investment over the years, this is really what investment has looked like. It's been quite simple. It's been a mixture of equities, cash, and bonds. What's happened in more recent years is that we've seen this multi-asset philosophy come forward, where you get a full range of asset classes, but we also look at different parts of the world, and we also look at more than one fund manager. What we do at True Potential is we've taken this one step further by sort of blending 8 different multi-asset managers and just putting them together and picking the best of what we have got within those asset managers to look at the better opportunities for growth. Okay, we believe that no one fund manager can always be right. I think we've seen this recently with Neil Woodford. He's been right for a long, long period of time, and then he's not right, and that's actually what happens. So we do believe that one fund manager cannot actually be right all the time. There's always winners and there's always losers. And also different strategies form differently across different parts of the market as well. Okay, so let's try and explain this to you. Right, okay, we've got 8 different strategy houses, most of all are household names. UBS, massive Swiss company, Allianz, Goldman Sachs, most people have heard of Goldman Sachs, Threadneedle or Columbia Threadneedle as they're called nowadays, Schroders, SEI, probably one of the largest American companies that no one's ever heard of, Close Brothers, both of them, they both work in there, and also we've got 7IM as well. When True Potential started with our own portfolios or our own platform, we literally started with just one company, which was SEI, and that was on the 21st of March 2011. So we just literally started with the one product, and that was an ISA. So we literally had 10 days before the end of the tax year, and at that time we got £7 million invested in that 10 days, which was we thought was amazing. Very, very quickly, 7IN joined the panel of one, but 7IN came in, and Close Brothers decided not to come in, and then later on, a few months later, when they saw what we were doing, decided that actually they should be part of our panel. And since then, we've now grown to 8 different strategy partners. Now, the thing with these strategy partners, they're all different. They've all got different views. We were approached last year by another strategy manager, and they said, "Oh, you'll love us. We're just like SEI." Well, we don't want someone else who's just like SEI. We've got SEI. So what we're always looking for, we might very shortly have a 9th one coming onto the panel. Can't say any more than that at the moment, but we are talking to one at the moment who is different. So we won't add to this panel unless they are completely different. We don't want any duplications within the panel that we've got. Okay, so what we do with this panel, I'll just leave that slide up for a second. I'll just drag this flip chart over here, just over this, because I just want to just make sure everybody's got what we're doing here. In the break then, I'll just quickly started this. Okay, so what we've got at the bottom, hopefully you can all see this. You've got your usual stocks and shares at the bottom. So, you know, anybody nowadays, especially via apps, you can buy stocks and shares. And then obviously there are funds that buy the stocks and shares, and then you've got fund managers who sort of like buy the funds, buy the stocks and shares and whatever. And these fund managers are the 8 that I mentioned just a second ago. So UBS, Allianz, Goldman Sachs, Threadneedle, Schroders, SEI, Close Brothers and 7IM. Now what we've done at True Potential, we've just sort of like gone one more level up, where we've basically said, we've come up with 8 different ranges, from defensive down the bottom to aggressive there at the top. And then you've got cautious, balance and growth in between. So let's just look at balance for the middle, the green one right smack bang in the middle. So what we've done with balance is we've set up what we call the True Potential Balanced portfolio. And what we actually do is we literally take the balance of UBS, say the balance of Allianz, Goldman Sachs, Threadneedle, and so on and so on and so on. So we blend the balanced portfolios of those fund managers. Now we don't blend them equally either. We don't just say, okay, let's put 12.5% across the board. We literally blend them basically. We have meetings with them every single month, and then based on those meetings, we then tilt them and favour some fund managers over others. And I'll come on to that again in a second. But that's basically the way it works, and obviously that's the balanced portfolio. We've got a cautious portfolio and a aggressive and defensive portfolio. Now, for you sharp-eyed people out there, you'll see this cautious plus, balance plus, and growth plus. So the balance plus has still got a balanced attitude to risk. It's just got a little bit more flexibility in it, and I'll show you that in a second as well. Okay, so let's look at the portfolios in practice. So I literally did a snapshot of this yesterday, and so this is the True Potential Balanced portfolio. As I said just a second ago, we don't just put 12.5% in each. So as you can see there, we've got the Allianz. I'm going to use Steve's snazzy thing here. Oh, it works. It's good. Okay, so I've got the balance there. So we've got 12.5 in the Allianz balance, 15% in Close Brothers. We've got, that's actually 16% in the Goldman Sachs funds there, 9% in Schroders, 19% in SEI, 11% in 7IM, and 18% in the UBS balanced. So that's the balance. They are all our fund strategy partners' balanced funds, and then we blend them the way that we feel we need to. Okay, right, move on. Okay, so the Balance Plus, so what's the difference? Okay, now if you look at the Balance Plus portfolio, it starts off with, we've got quite a lot. We've got 20% in close growth. So that's up here. That's a higher risk than balance. But we've got 34% in SEI cautious, so that's down there. So it's pulling it down and sort of blending it out, so it's got an overall balanced risk. And so you can see there we've got Allianz growth, 7IM aggressive, UBS aggressive, again Schroders cautious and defensive there as well at 3.5%. So we've blended it. So it's for the balanced attitude to risk client that's looking for something a little bit more sexy, shall I say? Yeah, I can say that. Okay. Right. Okay. And we've also got a balanced income portfolio, slightly different because different fund managers, not all fund managers are building income into their strategy. So again, we've got quite a big chunk there in Goldman Sachs income builder at 50%. And then we've got obviously cautious there, and I mean these are all cautious on the balanced portfolio there. Okay, now I like this slide. This is my favourite slide. Now, okay, this is a snapshot now of the balanced portfolio. So the True Potential Balanced portfolio. So the bottom there, you can see we've got 18.5% in SEI, 12.25 in 7IM. So there's the weighting in each fund. What's absolutely incredible about this slide is these are all their balanced funds. Okay, now this is, if you look at the top here, so this is UK equity. So SEI, well actually, look, Allianz have got 26% in UK equity, and so's SEI. But if you go over here to UBS, they've only got 7%. So, you know, they're not favouring the UK market at all. And they've got the same view. They've got the same balanced view. And again, coming down here, looking at North America, we've got a really large weighting there by Goldman Sachs and 7IM, and not so much sort of like around the 10% mark there with Schroders. So you've got a complete breakdown here in the middle, but what's really interesting, I think, is this 22%, okay, which is in Schroders. And we've been keeping an eye on this for quite some time, because at the beginning of the year, we were thinking, have Schroders got this wrong? Why are they putting so much money in cash? Well, we were glad they put so much money in cash in February, I'll tell you now. So it's quite interesting how these, these balanced funds all have got the same view, but are investing in completely different parts of the world and sectors. Okay, right. Damien Hirst drew this for me, or a child with a crayon book. But again, let's just spend just a split second on this. This is sort of like just explaining again how different the funds are. What I think is quite interesting is only the orange and the red, which is Allianz and 7IM, sort of follow each other. So if everybody was the same, following on from my previous slide, then we would just have one grey line. We wouldn't have all these colours. But we've got all these colours because they're doing things. They've got very different views and opinions all the way along. Very, very different views. So I think that's quite it's very colourful, and but I think it sort of demonstrates the point, really. Okay. Now, we launched the True Potential portfolios only in October 15. So we launched them in October 15. Before that, we literally just had the strategy fund managers available from True Potential, so you could invest in any strategy fund manager that you wanted to. We wanted to put some science behind the investments and actually become a true a manager of managers, which is what we've done. Since then, we've had £4.3 billion now invested into the True Potential portfolios, which we're obviously over the moon about. Okay, rebalancing. So, you know, we only rebalance, we don't just rebalance for the sake of it. We don't just wake up and think, oh, we'll just move it around. We have, we have a meeting every single month with all 8 strategy partners, but that's not quite correct this day and age, because we're having meetings with them almost daily at the moment. I mean, I think since Brexit and since Trump, we've seen, we have a lot of meetings. If there's anything happened in the market, like we had the sell-off in February, we were having a lot of conversations with our fund managers and asking them what their views are and etc. I'm going to come on to that again in a second. So we were only rebalanced when our portfolios aren't optimized. Okay, so that's one of the main things that we focus on, and we must keep on top of it. We have these meetings on a regular basis with them. Okay, now I quite like this slide. So I'm going back a bit in time, but this was probably our most dramatic rebalancing that we actually did. So this is back to, you got December 15 here, all the way through to September 16. And I'm only showing you this one because we haven't had such a dramatic rebalance since then. So as you can see, in December 15, what we had is we had 13% in Goldman Sachs, okay? And so this is the Cautious Plus fund. So we had 48% there in SEI Defensive, 19% in 7IM Growth, 20% in Close Brothers, and 13% in Goldman Sachs. Now, during our December meetings, we met with all 8 of the strategy partners. 7 of them were saying one thing. One of them, Goldman Sachs, was saying something completely different. Now, when you sit down with 8 top investment houses, household name investment houses, and 7 of them are saying one thing, and one of them saying something completely different, you've got to stop and say, who's right? Is it the 7, or is it is Goldman Sachs right? Now, their view was, it was to do with the US going into 2016, and their view was completely different. We've all obviously got our own panel, which I'll come on to in a minute, but our panel also agreed with the other the other 7 investment houses. So we did a dramatic thing. We took the 13% we had in Goldman Sachs and we moved it into Schroders, just like that, overnight. They weren't happy, I can tell you that now, but that's the power that we've got within True Potential, that we've got the might of Goldman Sachs, one of the largest companies in the world, that we just literally turned it off because we weren't happy with what they were suggesting going into 2016. The good news is, as you saw earlier on, they're back in and they're back up to 16%. But it was a good thing that we did, because if you look back at over 2016, you look at Goldman Sachs' actual growth, it wasn't there. They did get it wrong. So it was one of the things that we felt we had to do, so we did it. Okay, so if I just follow the slide on, as you can see, You know, we do occasionally, so we had a couple of months we didn't change anything, and in April 16 we put a little bit into Allianz there and so on and so on. And then in August 16, UBS came in and we put 13% there. So we reallocated from the other fund managers. Okay. Okay, these are our decision makers. So we've got Chris Leyland's our investment director. He's previously worked at Deutsche Bank and Tilney. Chris has been with us since 2015, since we launched the portfolios. It's his baby. He's been running it. I think he's spoken before here, so some of you may even remember Chris. Jolly nice chap. He's just sort of like, you know, it's his job to go out and talk to all of our fund managers on a regular basis. Barney joined us in 2016 to back Chris up. And then Mark Henderson is one of our senior partners at True Potential. His job is to oversee the whole True Potential platform. Now, the next slide is we've got an independent investment committee that's headed up by a True Potential person called Colin Beveridge. Colin's job is to run the independent committee. This independent committee do not work for True Potential. They are external consultants that we bring in to oversee our decisions. So, going back to my Goldman Sachs decision back in Christmas 2015, it would have been the independent committee that had the final say to move that 13%. So we've got our own in-house committee, which was the Chris and Barney on the previous slide, and we have an independent committee that oversees everything. Funny thing is, I only realised last month that all of these 5 gentlemen are Scottish. That does tell you something, I think. Okay, it's quite shocking, really. It's quite good, though, in a good way. Okay, so what we've got is we have got global coverage. You know, if you look at the 8 strategy partners that we're linked with, they're literally everywhere in the world. I don't know where I'd like to live, actually. No, but you know, they've got everything covered. Literally, we're bringing in from professionals all over the world, so we can react very, very quickly to anything that actually happens. Okay, these are our performances. So what we've got is that's our performance since we launched in 2015 with the portfolios, and this is our performance for the last 12 months, just up to the 17th of April the other day. So we've got a sort of like so this figure here includes the downturn that was obviously, as John was mentioning earlier on, the end of January and in February. Okay, so that's the figures that we're getting there. Okay, key themes. So, actually, John stole most of my thunder earlier on. Actually, I'm sitting there at the back going, "Oh no, I was going to say that. I was going to say that." But obviously, he said it very well, didn't he? Okay, these are just some notes that I jotted down. So, just picking up on sort of like growth slowing. I think just to echo what John said earlier on. I mean, we do talk to a lot of fund managers, as I've demonstrated just now, and I think. I mean, the outlook, I mean, it was quite refreshing to hear John say it as well, is the outlook is really, really positive. That, you know, there's no negativity in the you know, from our fund managers at all. I mean, one of the questions that we always ask them, so we have 5 questions that we sort of like ask them most months, and one of them is anyone forecasting a sort of like recession scenario? And the answer is no. No one is saying, yeah, we've got another recession coming. That is not on the cards. So everybody's really extremely positive moving forward into 2008. Okay, going on to politics. Well, again, just picking up on what John said. I mean, Trump, yeah, he is literally a force to be reckoned with. Love him or hate him, he's here to stay. And I've got something else to say about him in a minute. But I think what's quite interesting is just picking up on what John was saying about China. I mean, what Trump tends to do is he has a meeting with a big world leader, and you know, literally before that meeting, he put a tweet out like, "Don't come and steal our products." Now, I think he does this on purpose because I think it puts him in a power, or he thinks it puts him in a strong power when he actually meets with this person. So, I mean, he does fascinate me totally. I feel like sometimes saying take his phone off him, but I don't know. It's one of those things. It's like he just, that's just the way he is. He puts it all out there. At least we know what's going on, which we didn't know normally, would we? But I think going on to China, I was just picking up what John was saying. Chrysler. It was Chrysler. Chrysler asked China if they could sell their cars in China, and China said, yeah, no problems, can we have the blueprints? Because we need the blueprints in case anybody's involved in an accident, we need to know how the car works and all that sort of stuff. So Chrysler said, yeah, no problems, and just gave them the blueprints. Within a year, they had the car on the road in China. And that's what Trump's on about. So, he has got a point. That's what they did to Chrysler. So it's quite interesting. But I don't think we are going to have a trade war with China. I think what you've got with China is that they are very, very tech savvy. They are working with a lot of really high-tech companies, obviously Apple being the biggest one that we all know. All the iPhones are made out there and all that sort of stuff. Again, interesting, Trump's taking that on because he's obviously meeting with Tim Cook, and just to see if he can sort of like get the iPhones built in the States. Good luck with that one. Okay, I think also you've got to look through the media noise. There's a lot of media noise out there, and I think newspapers are they sell if they say, look, the world's going to end. They don't sell if they say the world's not going to end. So I think part of our job at True Potential and any fund manager is to look through the noise and find out what's actually happening. Okay, let's talk about growth-free value. We've got growth managers like Close Brothers and Goldman Sachs. They actually look for overvalued stock. And again, picking up what John said earlier on, Amazon is actually, it's valued at 6 times the average of the US, other US companies. However, there's still massive growth in them. They could still, they're not going anywhere fast. They're just getting bigger and bigger and bigger. So again, we will look at those sort of like companies. The value managers like UBS and Threadneedle, they're actually pulling out of tech companies like Facebook. We've seen a lot of interesting news about Facebook. What was really hilarious about that whole Facebook thing was the panel that Mark Zuckerberg got put in front of. They just did not understand him. That was just shameful, really. So he had all that worry, and then he got put in a room with nobody that even knew what Facebook was. It was quite incredible, really. Anyway. But this is the whole point of the True Potential portfolios. We've got 8 different fund managers. They've all got different styles. And it's in this sort of market that the True Potential portfolios really come into their own. Okay, central bank policy. Right. Again, the US is leading the way. Everybody's watching the US. Why? Well, I'll tell you why. They are further through the recovery process than anybody else in the world. They are doing weird and wonderful stuff. They've got 4 planned interest rates this year. These interest rates are set in motion as if the US had 10% unemployment. Well, they've only got 4, so it doesn't really make sense. So the only thing that we can think is this is just a move back to normalisation. Most of us in this room will remember when interest rates. I certainly remember when John Major put the interest rates up in 1992 by 5%, and I had a mortgage interest rate of 15% for the afternoon, anyway. But even then, my mortgage was 10%, which, if you say to a youngster today, well, we were paying 10% mortgages, they look at you as if you're mad, as if, well, how could you ever even afford that? Anyway, so I think that's what's happening there. US earnings, okay, we've seen a massive 17.8% increase up from on the first quarter to the first quarter of 2007. Why? Well, Trump's tax politics is cutting in. He's cut corporation tax. We've got this onshore tax reforms. There's earning growth is massive. I'll come on to that again in a second as well. But within these markets, you've got there's a lot of mergers happening at the moment and acquisitions. And what you're seeing is that this has been done in cash rather than shares, and that's quite interesting as well. But there's also a lot of companies out there that are just not going to keep up. They're going to struggle. The other day, Mother shares fell by 24% in just one day. Now, I'm not being funny. If I was going to be buying a pram, okay, I'd probably just go to Amazon. I'll probably save 100 quid on it, and I'll get it delivered to to my house the next day. And this is what I think companies have got to wake up and understand now. My daughter's in her very last year at uni. She's doing a dissertation, and it's a visual merchandising course that she's doing. And we're putting her presentation together, and I said to her, What you need is to present this on one of these massive, great big iPads, the iPad Pros. And she says, yes, Dad, I definitely need one of them. So there we were, sort of like, 3 o'clock in the afternoon. She's got a presentation tomorrow afternoon. And I'm thinking, right, we've got to go and get an iPad Pro. So I live in Arundel. So we drove into Chichester, went to the Apple store. Can we have an iPad Pro, please, Oh, we haven't got any. Well, there's one there, but we haven't got any. But we can order you one in. I was thinking, well, I can do that for myself. Okay, thanks very much. So we come out of Chichester, and then on the way out, there's a John Lewis. John Lewis, they sell Apple stuff. Let's go in there. So we go in there, go into John Lewis. They've even got one out on display. I said, can we have one of them, please? Oh, no, if you want one, we have to order it, and we can get it into you by Saturday. No, I don't want that. Anyway, I then come out of John Lewis, and by now it's 5:45 at night. I get my iPhone out, put in the Amazon app, bang. The next morning at 10 o'clock it came. And this is what is happening. Okay, this is where you're seeing these big companies that are just not waking up and smelling the coffee to what's actually happening. But you know what? It's not new. I mean, Kodak, many, many years ago, massive film, they just led the world with cameras and film. And then all of a sudden, digital photography started taking off. And they said, nah, won't work, won't take off. And then Steve Jobs pulled an iPhone out and he put the camera into a phone, which everybody's got on them all the time. And then Kodak are now, well, they went bankrupt, and now they're just selling ink via their printers. It's a shame. I mean, the other one that really makes me laugh is Blockbusters. I mean, Blockbusters, you used to go out, you would get out of your car in the pouring rain, you would go into the Blockbusters, you would spend like half an hour trying to decide what film you wanted to buy, rent, and probably have an argument with whoever you took with you. Buy loads of sweets and crisps that you don't really need, to get to the till, to get it, and then go home to find out that the wife doesn't want to watch it, and then you leave it on the side, and then a week later you take it back and they say, oh, well, that's another £5, please. Why did they not think that streaming would work? And you know what is really, really funny is that Blockbusters were given the opportunity to buy Netflix for £40 million, and they said no. They've gone now. They just litter our streets of compound lands, So this is not new what we're seeing. So the likes of the Mothercares, Jessops, I mean, again, Jessops, you go in there, you get some nice young guy, he tells you how to work your camera, you then go out and buy it on Amazon. It's not right, I know, but you're not going to spend an extra 50 quid when you can get it cheaper, and it'll just come to your door the very next day. Companies need to move with all of this. Right, let me move on. Okay. So I think, just coming back to Trump, I mean, he is quite a strange person, as John was saying earlier on. I don't know if anyone saw the Daily Mail thing about the time traveller who's come from 2045 that says that Trump will win a second term, but it was quite worrying. But then, I'm not being funny, I opened up Twitter this morning, he said something horrendous about disabled people, and then at the same time, they're saying he could get a Nobel Peace Prize for what he's done over in Korea. I mean, the man is strange. Okay, moving on. I think really just overall, it is positive. It's time in the markets, not timing in the markets. That's the big difference. No one really gets timing the markets right. It's about being in the markets for a reasonable amount of time. I've got a slide on that in a minute. What you've seen recently is you've seen the FTSE drop from 7.7 down to 7.2, and now at the moment it's up at 7.5. So when is now a good time to get in? So if you were timing the markets, now probably do it. But just to wrap up on this bit really, looking forward, I think everybody's really clearly positive. You do need to have this flexibility that we've got here, because that enables you to sort of like have the ability to invest in different countries, different currencies, different asset classes, and it does help you to migrate your risk of your investments. Mitigate, sorry, not migrate. I can't even read my own writing. Right. Okay. Moving on. Oh, it's gone frozen. Okay. Right, risk. Let's just touch on risk for a second, because I think this is one of my pet things. Okay, that is the bank savings rate from 87 through to last year. It is just tumbled away. And again, if you're saving money, you've got money in the bank, you will know this all too well. Okay. On the other hand, this is equities. So this is UK equities, sort of like going up. And so it may jump up and down a little bit here and here, but on the whole, we've got one slide going down and one slide going up. But what is really interesting is this is the amount of money that is, so this is what's happened to the interest rate, and this is the amount of money that is going into cash ISAs. So again, a cash ISA, you'll be lucky if you're making 0.5% or whatever. And inflation's now free. So you might as well, even if you put it under the bed, you wouldn't be any better off. It's just, I think the government need to look at the whole cash ISA scenario, because this is, to me, one of the ways that you can boost your money. Just don't leave it in a cash ISA for too long. Okay, support. Okay, so I'm going to come on to in a second about the support that True Potential offer as far as you guys are concerned. But some of you have heard Jaz's comments about the websites. We have got a website. Unfortunately, your clients were all reset when you went directly regulated, but that was to do with agencies more than anything else. But the client sites are there for you to use, for you to look at 24 hours, 7 days a week, whenever you want. You can access them from your phone, your tablet, and your computer. What's quite interesting is that we know that over 50% of people are accessing them from a mobile device now. So that's quite a massive shift that we've had in recent times. There's quite a lot of client servicing available from True Potential. So whenever you do take out something with True Potential, you will get some nice little insight magazines every quarter, which again are quite good. This is issue 4, where it says where next in search for income. And then this is issue 9, which was investing in an uncertain world. How times have changed between those two times. Okay, so what I'm going to do very briefly now, I'm just going to go through the client website and just explain it to you. So first of all, you sort of like get an overview. I've just got to stop that off. Okay, so you get a sort of like an overview at the top there. This is your portfolio, that's your total investment. This is your recent change since you last logged in. And then down here, you've got your True Potential investments and any other investments you may have. You can store your banks on there, and you can transfer policies using the website up the top here as well. If I go into investments here, it's got a nice snapshot of your investments in a more in-depth look. So again, you can see the amount you invested, 87, it's now worth 109, it's gone up 25%. Since you last logged on, it's gone down slightly, and you've got a graph of your investments here. Your investments can be broken down. You can name them as pots, my holiday home, retirement pot, holiday of a lifetime. You can then invest individually straight away from the screen via our impulse save option, which I'll show you in a second as well. If you go onto the personal finance tab, this is an optional thing. Some people like it, some people don't, but you can, if you want to, link your bank account details in, and so you can see your incomes and outgoings. You can see where you're spending your money on a regular basis. You can even see your transactions, and you can literally see where you're spending your money. You can recategorize them as well, so you can personalize it to your own categories if you want to as well. You get an analysis breakdown again, so you can see where you're spending your money. Again, it's an optional thing, that. Okay, assets and liabilities, very simple page here. Basically there's your assets, there's your liabilities. Again, that can all be showed there. Other accounts, so no more keeping your stuff under the stairs. You can put your mortgage policies there, your mortgage, your income protection, or any details, you can put it there. You can send messages as well. So if you want to send a message to Jazz and her team, you can just go open up new message. You can say, ISA 2018. And then you can put, hi Jazz, can I have an ISA please? And it will just go in there like that. My spelling wasn't good, not to keep talking around. Okay, cool. So, and then you literally click on send message, and that will send the message straight to Jazz and her team here. Okay, that's pretty much the client site, so I'll move on from there. Now, okay, now this is my favourite. Okay, so that's my very busy iPhone screen. I apologise, I've got lots of apps, and I obviously need to catch up on my emails. I've got 16 emails there. These devices are wonderful. They're a plague as well, because they're with you all the time, and people can talk to you all the time and text you all the time and email you all the time, but they are a wonderful device. So what I'm going to do is I'm just going to do a very quick impulse save. So I've gone into my True Potential app, so in I go, and it opens up, and straight away it will ask me for my password, and I sign in. It will remember that for you, so you don't have to remember it. I have to put in my Face ID with my phone, or you just put in your password, and then you're in. So I'm in, and straight away, it's in real time. It will value my True Potential stuff. So this is actually me. So it will value it up. So there's my wealth, and I click on the button there, and today I'm going to put some money in my ISA, which is the top plan there. So I click on there. It will value my ISA, and then I will quickly look at it. There's my goal that I've set myself, that red line way at the top there. And that's my ISA there. You can see what it's been doing over the last couple of weeks, and the green dots of previous impulse saves that I've done. Okay, I'm now going to impulse save, so I click on the green bar at the bottom, and then, as you can see, it's all in real time, and then straight away, I get an option, £10, £50. I can put whatever I want, from £1 up to £100,000. That's my goal, if I wanted to get to my goal, but I'm just going to put in £100. So I put £100, I click on my debit card there, and do I want to make this impulse save? Yes, I do. So I click on OK there, and then it just confirms what I'm going to be doing, and I click on Make That Impulse Save. So I've now done that. Done. Easy. So it took about 20 seconds, you know, very, very quick and easy. Brilliant. Yeah, at the end of the year when you're trying to get your money into your ISA and you just want to get your phone out and just do it very, very quickly. So that's the impulse save. Okay, so True Potentials, just to finish off on really, we've got no charge for discretionary fund manager. I mean, you know, we are managing the managers. That's the whole point of True Potential. Okay, so we don't charge for that. It is very advanced. I'll be really clear, no one's doing what we're doing. You know, we are sort of like working with these guys. People will go into these individually, but you don't need to. You can go into True Potential, who will go into those for you. Okay, and again, the whole point of it really is to just bring the cost down, manage your volatility, and sort of like get some good returns for you. And that's my lot. Thank you very much.
Thank you very much, Miles, for that. That was really fantastic. And I think for me, it just highlights probably one of the reasons why a lot of clients recent years said sort of why we recommend using True Potential, and that right there is the reason why. Miles hit the nail on the head. There is no one else that I'm aware of that's doing what they're doing in terms of their innovation, the diversification of portfolios, and the technology as well. So that really is our job at Redwood, is to make sure that we're holding these guys accountable. So I go up to Newcastle every year. I have monthly webinar conferences, the fund managers, so we understand what they're doing as well, making sure that these guys stay the market leaders so I can continue to recommend them. And that's the same, you know, whether we're recommending Octopus for individual clients or Charles Stanley, it's making sure that everyone that we're recommending to our clients are market leaders and they are staying ahead. And I think Miles also hit the nail on the head there as well, that kind of level of discretionary fund management normally comes at a premium, and actually in terms of cost charging, True Potential again are market leaders in terms of how competitive they are. So that's why it makes me feel much happier knowing there's all that extra oversight going on in investment management, not at an extra cost to you guys as well. So have we got any questions from Miles? Oh yes, a couple of questions.
Yep.
Andrew, go with you first.
Yeah, I hope this isn't a political question.
Okay.
Obviously, when we set up a portfolio with you, there's quite a lot of discussion with our financial advisors up front saying, you know, do we want to be cautious?
Yeah.
Are we looking for growth? Do we want to be risk takers or risk averse? But having done that, at least in my case, I've put an amount of money in, which I hope will grow over the next few years.
Mm-hmm.
I'm looking for like a long-term saving. And, you know, every so often I'll go in and look and see, oh dear, it's not doing very well. Oh, yes, it's doing very well. Up and down. I don't suppose many people go in and necessarily change their that setting. You know, are you risk averse? Are you looking for growth? Are you looking for protected increase? How often should we be looking at it and think, gosh, I'm not very happy with this. I think we should be doing something about it.
Right. I mean, what's quite interesting is we use what is called the Morningstar attitude to risk profiler, and that enables you to sort of like, first of all, you've obviously done it, so you've gone for it and you've come out a certain attitude to risk. I think that is so personal. That is the real most personal thing, and it will be life events that will make you change. Because it's quite funny. What I've seen is I've seen people that have not planned enough into their pension. They may be really, really sort of have a balanced attitude to risk, but because they haven't planned enough for their pension, they go aggressive on their pension planning. So you can have a situation where I am balanced, but for this I'm going to be aggressive, because that's a life event where they haven't put enough in over their lifetime, so they just feel they need to put more in. So I think things happen to people which will make them change. It could be a death in the family, it could be an inheritance. So I think at those particular life-changing points, that would be the time to review your attitude to risk, which will then affect which portfolio you're in or your view going forward.
Okay, so
yeah.
It's nice that we can go in and see how things go.
Yeah.
But in general,
But that's the whole point. Yeah, that's the whole point. I mean, if you've got a balanced attitude, we are managing that. That's our goal, is to manage you within that range and not put you somewhere where you don't. It's quite funny, because I look after other firms that use True Potential as well. And one of my guys the other day, he said, I've got a bit of I've got a client who's done very, very well. She's very, very happy with her investments. Now, as the advisor, he sat down with her. He's gone through an attitude to risk questionnaire, and she's come out cautious. And the funds and stuff she's in are up here. So it's one of these sort of things where it's a difficult conversation to say to the client, well, actually, you should be looking at cautious because that's important to you. And in the past, some of the other advisors put you up here. So you just have to manage that expectations and find out exactly what people want. But I mean, the key is to review it all the time.
Well, Miles is definitely right. So that's something that when we talk one-on-one, if we feel that the attitude to risk inside the portfolio needs to change, then I then change the instruction to True Potential, and then we can change the investment strategy as a result of that. So
Yeah.
the process. Any other questions for Miles? Anything for other hands, Jen?
Yes, so on that attitude to risk, is there a way that we can see what the settings are for our investments on the web?
Yeah, there is on the client site. You can go into
And that's another thing. I was in there the other day. I couldn't see it. But is there a way that we can look at the costs, fees, and charges, those sort of things?
Yeah, we have changed the client sites around recently. So, and if you go up to the top bar and go into your settings there, you should be able to see most of that information within there. We just put it up to the top, whereas it was down on the side beforehand.
And you have to click into the individual investments.
Yeah.
To then get the attitude to risk breakdown, if you need to see that. So
Yeah.
looking at the overview page,
Yeah.
click into the actual investment. But again, that's the perfect example of the coffee mornings now on the Friday when we're opening the office. Anyone that wants just a little bit of extra kind of, I don't want to say training, but a little bit more of a in-depth kind of look at the client site and where to click and how to see things, use the Friday coffee mornings now once a month, come drop into the office, and the team can take you through that on the technology side.
Yeah. Also, it's actually really clear to see on the app. The app has the charges. You just have to swipe along to the end, and you should be able to see your individual charges on the app. It's clearer, actually.
Any other questions for Mark? Oh, yeah.
Just about the return.
Yeah.
It's good to hear that we've got positive outlooks that people are saying that. Obviously, it has dipped lots since
Yeah.
January. What sort of time frame do you think it took to recover?
Well, it's quite funny because, as I said, the FTSE's gone from 7 down to 7.2, and he's already up to 7.5, and that's just been a couple of months. So, I think from talking to our strategy partners, we're seeing, a recovery definitely from the drop back in February. We're literally probably only a month or two away, but I don't know. It's like a changing world when we wake up each day. It's like, what's Trump done today?
I think what's interesting, I think John picked up on the fact that obviously we've got the midterm elections and things like that coming in the autumn. So I think a lot of the uncertainty around the trade positions will probably get clarified, funnily enough, before then. So yeah, I think maybe another, at the most, maybe another quarter of instability before hopefully things settle on that side and come back.
Thank you.
Any other questions? No. Fantastic.
Thank you very much.
So thank you very much,
Thank you.
Miles.